I am Henry Lazenby, the Western editor for the Northern Miner. Joining me now is Seabridge Gold CEO and President Rudi Fronk. Thank you for joining me.
Henry, great to be here.
All right. So Seabridge has been around for several decades at this point. Let's go and fetch the story from inception. Take us through the evolution of the company to where it stands today before we drill down into some more details of your various assets.
That's a real history lesson. It's been 25 years since we started the company, but let's go back to October of 1999. Gold was trading at about $260 an ounce for various reasons. My colleagues and I believed it would go substantially higher. I'm a mining engineer. I built mines, but we thought the price of gold would go a lot higher. And our goal was to try and create within a public company an exceptional leverage and optionality play to the gold price. And the simple concept was growing ounces in the ground faster than shares outstanding. The thought being that the more gold we can provide on a per share basis, the better our share price should do.
Mm-hmm. That seems like a unique philosophy. Have you encountered this elsewhere?
No, because our industry are serial diluters.
It's a serious allegation, but it's true, unfortunately.
Unfortunately, it is.
Right. So your cornerstone asset at the moment is the KSM project. It's the Kerr Sulfurites Mitchell deposit. Please tell us a little bit more about this. It's a really large deposit, albeit a little bit lower grade. You tell us what it's all about.
Yeah, so this was a project that was orphaned basically by Placer Dome. They had spent $25 million there in the 1990s. They didn't want to advance it any further, and it was up for sale. And we came in and bought it in June of 2000 for $200,000. So they were willing to give it away for pennies on the dollar. We saw exploration upside at the time. When we bought this project, there were two known deposits, the Kerr and the Sulfurites. We found Mitchell in 2006, Iron Cap in 2010, and we bought our next door neighbor's East Mitchell deposit in 2020. If you look at KSM today, we now have 12 billion tons of economic resources at KSM. 3 deposits are more gold dominated, the other 2 deposits are more copper dominated. And these 12 billion tons with the contained metal makes it the world's largest undeveloped gold project in the world. If you ignore the gold, it's the 3rd largest undeveloped copper project in the world.
All right. Now, with such a large resource endowment, what are some of the challenges that you're facing in getting this project off the ground and into a starter operation?
Well, we've now spent $1 billion Canadian on KSM through initially exploration, engineering. We've taken this project successfully through the environmental assessment process with construction permits in hand, and we've now taken it one step further where we've done early site construction to ensure that the permits we have in place are valid through the life of the project.
Okay, and so you've stated publicly recently that your key priority this year is to find a partner for the project. Could you perhaps give any insight into how that process is going? Do you have many calls a day inbound?
Well, you know, one thing we have to recognize is the universe of potential partners for a project the scale of KSM is quite limited, and that was always a challenge. When I look at the universe today of the large gold companies and the copper companies, there's maybe 7 companies in the world that we would be comfortable with as a partner that have the social, technical, and financial wherewithal to develop an asset like KSM. And those are the companies we're concentrating on. We started a formal joint venture process a little over a year ago. We engaged RBC Capital Markets to run that for us. Last season, we had 5 of the world's largest mining companies come do some boots on the ground, technical due diligence at the site. And we're now actually in discussion with 6 companies on a joint venture structure.
Okay, so hopefully some news coming from there soon, in the next 6 months.
Yeah, I think the first stepping stone the last stepping stone I'll call it, we need to complete is, right now our permits are good until July of 2026. There's a concept in British Columbia known as substantially started, that if we get that designation, the permits are then good for the life of the project. So over the past 3 years now, we've spent about $500 million Canadian on construction activities. That's the substantial start aspect of the project. And we've now filed an application with the regulators to get that designation. That application with the regulators is not just ours. It also has very strong letters of support from the Niska Nation, the Tahltan Nation, the Gitxsan Nation, BC Hydro, and local communities.
And you all already have agreements in place with the surrounding First Nations in support of the project, right?
We do. In fact, the Niska Nation, the Tahltan Nation, the IBAs we have in place would entitle them to opportunities in contracting as we started the construction activities. And to their credit, they actually formed a strategic joint venture called the Treaty Creek Limited Partnership, where now we're giving the work for the project directly to that partnership.
That's amazing. Yes. It's an example perhaps other First Nations can also try to emulate, right?
Yes.
All right, so that's KSM. Nearby, you also have the Iskut asset, which is an exploration stage asset. Please tell us more about that and the current status there.
Yeah, so we bought KSM at a very market bottom. Clearly, gold was trading at about $260 an ounce. It went up, obviously, subsequent to that. In 2015, the gold market cratered again. Valuations were decimated, and it created the opportunity for us to go out and do a second wave of acquisitions. During that second wave, the Iskut property was the first project we acquired. We saw a lot of similarities at Iskut to what we saw at KSM, and we're now advancing on those opportunities. We believe there's clearly gold and copper mineralization throughout the Iskut project. In fact, we have a small resource there called Bronson Slope already. But our focus now is to find a large intrusion, a gold copper porphyry, that we can then advance like we advanced KSM.
So what does the exploration plan entail this summer? Do you perhaps have a figure for the budget, how many meters that could translate to of drilling?
$12 million. We're concentrating on 3 targets this season: Snip North, Bronson Slope, and Quartz Rise. There's a lot of evidence that there should be a porphyry beneath these zones of mineralization we've already encountered, and we're now chasing those.
All right. And so in your latest acquisition wave, you also picked up a third asset called Three Aces up in the Yukon territory. What's the current status of that project? Are you actively pursuing exploration work there?
Yes, we are. We were following that project for a number of years. We really liked it, but the valuation on that got a bit ahead of itself. At one point, I believe it generated a market cap to the previous owner in excess of $200 million. COVID hit, valuations got decimated, and we were able to step in and buy that asset for 300,000 shares, so about for $3 million. We have a $6 million program underway right now at Three Aces. We're looking at an orogenic system there. It's a big system. It's 300 square kilometers. Gold showings up and down the entire belt. And this year we'll be hopefully identifying targets that can then lead to resource delineation with the follow-up program.
Okay, so I think you've alluded to them, but let me ask you again, what are the catalysts then over the next 12 months as you see them unfold?
I think the first one, clearly a substantially started designation. That's probably the last key to the puzzle to get a joint venture in place. As you would imagine, any big company that's looking at investing or advancing a $6 billion project needs to know that the permits are not about to expire. So getting that designation is paramount, and we think we'll have that designation in place by September. Second catalyst would be a joint venture. Off the back of substantially started, we can then advance discussions and hopefully get to a transaction that we can say yes to. I should also point out that over the years we have turned down proposals that did not meet a number of the objectives you were looking for. But when you look at the world today, you look at metal prices where they're sitting, you look at the big copper companies all of a sudden knowing they need new projects, the big gold companies needing reserves because they're running out. This is the time to get a deal done, and we're confident that with substantially started, we'll get that done. And then the other catalyst would flow back to exploration. Drilling results, obviously, we'll be announcing at Iskut as they come in, as well as at Three Aces.
Okay. What else is important to note about the company and its strategy?
I think our ability to keep the share count low. When I look back on the 25 years that I've run the company as CEO, I look at our share count at 89 million shares and I say, how the heck did we get that done? We look at us today in total resources, we have 183 million ounces of gold in all resource categories, 89 million shares outstanding. We have over 2 ounces of gold in the ground per common share. That's 5 to 50 times more gold ownership per common share than the leading gold companies.
And you remain undervalued, let me guess.
I think so. I mean, we have, my wife and I have 95% of our family's net worth in Seabridge common shares. So if I thought we were overvalued, we wouldn't be holding those shares.
That's substantial skin in the game. All right. Well, that's Rudi Fronk, President and CEO of Seabridge Gold. Thank you for joining me.
Thank you, Henry.